How's it going, everybody, and welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. Before we get into that, however, we're going to take a look at two things here under our sentiment tab. The first being COT data. COT data is the commitment of traders data, and we're going to be able to see what institutional traders are going long and short on. So here up top, we have this list of all of these different assets that we're tracking in the Edge Finder, along with their long and short percentage from what institutional traders are doing. So we see the same bottom three here in the short position that we've seen the last week or two, with the most short overall being the Canadian dollar. 90.4% of open positions on the Canadian dollar from institutional traders are short positions, leaving just 9.6% as long positions, followed by the Swiss franc and then the 10-year yield bonds right after that. If you've been keeping up with these videos for a while, you know that the Japanese yen used to be down here, but over the past few weeks, COT traders have gotten a lot more bullish on the Japanese yen. We see it right here in the middle, not really leaning towards the long side, but certainly a lot more bullish than it used to be a few weeks ago. We see the US dollar here up above 60% at 66.5%. So 66.5% of all open positions on the US dollar from institutional traders are long positions. And then our top three are the same that they've been for the past few weeks, maybe even the past few months at this point. We see US oil, silver, and number one being gold. 84.69% of all open positions on gold are long by institutional traders. Moving down here, we can see the latest weekly COT filing, and this shows us the recent change from last COT report to the most recent COT report. So what we see here is the Nikkei had the most positive change week to week out of all of our positions. We can see that there's only a total of just over 20,000 open positions on the Nikkei right now, but from last week to this week, we had an overall change of 2,317 additions to the long side, and 976 short contracts were closed. Overall, the Nikkei is favored on the bullish side, 65.6%, and the net change difference was 7.49%. Again, we have about 20,000 open contracts from COT traders, and from last week to this week, we saw over 2,000 long contracts added, about 1,000 short contracts closed. On the opposite side, we see the S&P 500, which has substantially more open contracts than the Nikkei. We're looking at like over 600,000, and long contracts, we see a change or a close of over 6,000 long contracts, and an addition of over 56,000 short contracts. So from last week to this week, bearish sentiment on the S&P 500 is growing really strong. Right now, it is sitting close to 50-50, slightly favored in the short position here at 57%, but remember, it's really not that far off from a 50-50 bias. However, again, this is such a huge number here, 56,704 short contracts opened compared to this 6,191 long contracts closed, that we see a big net change difference here of almost 5%. Let's move on into retail positioning. We've seen what institutional traders are buying and selling. Now let's figure out what day traders are buying and selling. So we're going to start off first with our major currency pairs. These are US dollar pairs. And remember, we're looking at a contrarian signal here, because more often than not, what the overall crowd, what the majority of people are doing in the markets is wrong. It usually doesn't end up working for them. So that doesn't mean that it happens every single time. That doesn't mean just because they're long, we're looking to short, and vice versa. However, in the Edge Finder, we score on a whole bunch of different things to get an overall bias. If we actually look at top setups, you can see all of the different things that we score here, and retail positioning is just one of those things. And we use a contrarian signal, meaning if it is favored on the long side by the crowd, we are giving it a negative score here. So we see USD CHF and USD CAD both favored pretty well over 60%, 75% here for USD CAD, 81% long here for USD CHF, and those are getting negative signals. NZDUSD, Aussie USD, and Pound USD, on the other hand, are all up above 60% on the short side of things, and those are getting a bullish bias from us. Now we're going to check out minor currency pairs. We see a big list here of things up over 60% on the long side. So these are all getting bearish signals. And these right here are all over 60% on the short side. And these are getting bullish signals. Now we're going to check out metals, indices, crypto, and commodities. I need to remove these minor currency pairs. And there we go. Here's everything else left on the list. All of these things here up over 60% on the long side from day traders. They are getting bearish signals. And these three down here are up over 60% on the short side, and they are getting bullish signals. You know what's kind of funny is the day traders right now are up over 60%. 62% of day traders right now are shorting the S&P 500. And that is kind of falling in line with what we see here from COT data, with all of these opening short contracts happening on the S&P 500. So that's interesting to see. But with that sentiment out of the way, let's go back on into top setups. I'm going to remove all of the neutral biases. And here is our full list of bullish and bearish biases that we have today in the Edge Finder. Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com. Now, this is a huge list of bullish biases in the Edge Finder right now. We see a lot of +5, +7, and +8 scores respectively, but not a ton of bearish biases in the Edge Finder. However, we do have one very bearish bias, and it's USDJPY with a strong score of a -10. Choosing from the top here when it comes to the bullish assets, I see the Dow, NZDUSD, Pound CAD, Aussie USD, the Nikkei, and the NASDAQ. Now, normally we stick to currency pairs, and so we are going to continue to do so, and we're going to pick from NZDUSD, Pound CAD, and Aussie USD. And I think I'm just going to go with the top one here, NZDUSD, with a solid +8 score. Well, they all have +8 scores, but NZDUSD is up here at the top, so we're just going to pick that one. USDJPY with a very bearish bias score of -10 down here at the bottom. And in fact, let's start with that very bearish bias. I'm going to head on into Forex data scanners, and I'm going to scroll all the way to the bottom. USDJPY, like I've mentioned, has a very bearish bias, score of -10. COT data is a score of -2, and retail sentiment is 0. Taking a look at that COT data, we see that the US dollar is favored up above 60% here, 66.5% long, and the Japanese yen is sitting around 50-50. The weekly change for the dollar was negative, fairly negative too, about 2.5%, and the Japanese yen technically had a positive weekly change, although it was very, very minimal. Retail traders, again, too close to 50-50 to call. We see 55% long, 45% short. So again, too close to 50-50 for it to really get a score here in the Edge Finder. Seasonality, however, is a score of -1. And we can see here that over the last 10 years averaged together, typically what happens in the month of August is USDJPY trades lower, which is what we've seen so far this month. Our trend reading score is a score of -2. And taking a look at the actual daily chart, We can head on into price forecast. I'm going to search USDJPY. I actually saw it right there at the top, but that's okay. Ever since August 16th, this thing has been in a serious downtrend. August 22nd to August 23rd, we had a little bit of a pop up, but since then we see the same thing. It has been a little bit range bound over the last 3 or 4 days, but overall this thing has been in a really solid downtrend for most of the month, and price forecast predicts that that is going to continue to be the case. Finishing up here with our fundamental data, we see GDP, manufacturing, services, and retail sales all coming in with 0 scores. Inflation, unemployment change, unemployment rate, and interest rates all have negative scores here. So overall, fundamentally speaking, it is certainly leaning bearish because it's either bearish or it's a neutral. So overall, this thing is leaning bearish, fundamentally speaking. Taking a look at that fundamental data here, we don't have the numbers listed. If you want to get more in depth with the fundamental data and the numbers and all the things that come with that in the Edge Finder, we do have lots of different tabs that go over much more detailed fundamental data. But here in the scanner tabs, we are keeping it simple and keeping it moving by just letting you know whether or not the currency beat, met, or missed the forecasted expectations. So GDPA here is going to be our first currency pair listed, so that would be the US dollar in this scenario. GDPB would be the second currency pair listed, so the Japanese yen. So we see here in the US and in Japan that we both beat the forecasted GDP expectations. Again, both in the US and Japan, we missed on the forecasted manufacturing PMI expectations. Again, both in the US and Japan beat forecasted services PMI expectations. And one more time, both the US and Japan beat their forecasted retail sales expectations. Where we see a little bit of change here is that the forecasted CPI in the US was 3%, but it ticked a little bit lower, down to 2.9%, whereas in Japan, the forecasted 2.8% inflation rate was exactly what happened. We came out right at 2.8% in Japan. The unemployment change here, we see that the forecasted unemployment rate was 4.1% in the US. It actually ticked up to 4.3%, whereas in Japan, the forecasted unemployment rate was 2.6%, and it actually ticked a little bit lower, down to 2.5%. So there we go. There is all of the data and numbers backing up that -10 very bearish bias here on USDJPY. The other pair that we said we were going to take a look at was NZDUSD with a bullish bias, score of +8. COT data is a score of +2, and retail sentiment a score of +1. Taking a look at that COT data, we've already talked about the dollar enough, but the New Zealand dollar is actually favored up above 60% on the short side. 63.36% of institutional traders are shorting the New Zealand dollar right now. The weekly change was positive, and the weekly change for the US dollar was negative. Again, we see up above 60% on the short side when it comes to retail traders, and that is giving us our contrarian +1 score there. Seasonality, however, is a score of -1. We can see that over the last 10 years averaged together, historically speaking, in the month of August, NZDUSD typically trades lower. But our trend reading with a score of +2 is telling me that that has not been the case so far this year. Heading into price forecast, we'll find NZDUSD, and we'll take a look at what the daily chart looks like. And it looks slow and steadily moving higher ever since August 16th. We've seen pretty much nothing but uptrend. Again, slow and steady, but price forecast predicts that that is going to continue to be the case. We'll finish up with our fundamentals one more time here. We have a GDP, services PMI, inflation, and unemployment rate. Those are all 0 or neutral scores. Manufacturing PMI is a score of +2. So is employment change and interest rates. Retail sales, however, a score of -2. So overall, looking fairly bullish in terms of the fundamentals. But let's take a look at the beat, missed, or met expectations. So GDP-A this time is going to be the New Zealand dollar because it's listed first. GDP-B this time is going to be the US dollar. And we can see that both New Zealand and the US beat their GDP forecasted expectations. Manufacturing PMI, however, we see a beat for New Zealand and a miss for the US. We see both of them beat services PMI expectations. And in terms of retail sales, New Zealand missed out on retail sale expectations, whereas the US beat their retail sale expectations. Inflation data, we see that the inflation rate in New Zealand was forecasted to come out at 3.5%. It ticked a little bit lower, down to 3.3%. We see something similar in the US where it was forecasted at 3, but ticked down to 2.9. Unemployment rate in New Zealand forecasted to be at 4.4%, ticked higher up to 4.6, and in the US forecasted at 4.1, ticked up to 4.3%. So there we go. There is all the data and numbers backing up that bullish bias +8 score here on NZDUSD. If you enjoyed what you see in this video and you want to get the Edge Finder for yourself, you can find out more about it on our website, a1trading.com. And if you want to get it at a discounted price, you can find it again on our website, a1trading.com, or in the description down below, and use promo code A1YT at checkout for a discount on the Edge Finder. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.